Okay, so since the other talks are technical, I'm going to cover some non-technical aspects. Yeah, both philosophical and economical aspects of this topic, because we want to be interdisciplinary. Okay, so first I'm going to discuss, having read this and responded to this consultation, basically there is some like ambiguity or uncertainty, or so I want to like address that first, and then I want to like comparing like the centralized, decentralized finance, and then I want to just go back and focus on like on positive use cases for the CBC and like the economic implications and so. So yes, so the two worlds. So here is a quote from Balaji, the former CTO of Coinbase. Even at a very young age, a child believes he can appeal to a higher power, a Leviathan, a powerful man who can sweep the field of his enemies. And then actually he refers to two different mechanisms that establishes confidence in a society and its monetary system. And he actually, the three mechanisms to build a nation which has a currency is based on God, or the network, the decentralized network, or the state, which has a central bank. So then he will say that in the 1800s, you wouldn't steal because you're afraid of God. Then in the 1900s, you wouldn't do it because you're afraid of the law of the state. And this century is more that the network and the decentralized network that kind of prevents you. And then actually, there are so this higher force that we trust basically is different, obviously, on the blockchain, because there we don't trust anything. It is trusted, it's decentralized, so that the value comes from network. Whereas in the state, it is a central bank. However, he also says that these can be combined together. They're not actually mutually exclusive. So maybe one way to, one interpretation of the digital pound maybe is that you take the concept of the state that you trust the central bank, and you to like insert it inject it into the decentralized blockchain. Anyway, I would just mention here that obviously first was the Bitcoin, and then later Ethereum. And actually, they're obviously decentralized. And then in China, they thought, they saw these things, and they made this digital RMB, and it's like, okay, we kind of seen these things, but how can we make something which is which we can fully control? So they like the efficiency aspect, but they didn't want to have decentralization. But obviously, so that's like the Eastern version of CBCs, whereas the digital pound has like looked at all of these, and they obviously have different values. So they're interested in a version which is like respects the like privacy and the which is like fitting for a liberal democracy. So anyway, so they learn from each other, but there are certain things which can't be copied, which are not appropriate, which are basically not applicable. And for example, like being able to see everything, control everything, this kind of totalitarian approach, that doesn't fit basically the vision of the digital pound. And so when I say the two worlds, I'm referring to a centralized financial system of the nation state, and with the decentralized permissionless blockchains and DeFi, and there are now like maybe 200 different blockchains. And obviously the thing on the right side, they exist, they create immense value, and without having a notion of a state, and in their kind of like that, all that value creation is fully sovereign and is global. Whereas here in the left-hand side, here it is controlled by a nation, and the monetary policy by a central bank. So these are like two different approaches, and when you write a specification, it's good to say, okay, we firmly belong to this or this. But the specification is like borrowing concepts from both of these. All right, so in a regulated financial system, it's permission by state, and you're to do something, you're a human being or a company, and you have to be uniquely identified, and someone has this like a law. Whereas on the decentralized blockchains, by default, participants are anonymous, and there is no notion of country normally. And obviously, all data is visible, or transactions are visible. And there is like, you don't care if someone is a human or an algorithm or a bot. Like, so there are like these are different philosophies. Anyway, so one question from the specification of the digital pound was, should non-residents of the UK be allowed to use digital pound? Which I thought was interesting. I don't know if they have decided that, but I was like, some other interesting question. What happened about non-human actors? Should they be allowed to use digital pound? Or if you're proven you are a human, you're a good person, but actually you don't have a location, can you still use digital pound? So there are other more interesting ways, because this is basically the common way how things are, how values exchange on the blockchain is on the decentralized blockchain is much more open. All right. And now just a few points how blockchain creates economic value in society. So for example, convergence between different regions that previously were like different markets, and these markets might have been disconnected, but because many things on the blockchain they don't have an actual country, so quite often there's basically like the emergence of a global market for many things. And technology allows new things which are previously impossible and which the legal system did not envision. This intermediation is like basically when you were used to buying a product, let's say a bank account or maybe insurance or buying art, and basically you had to buy it as a package, and there were like different intermediaries and they were all charging fees. And suddenly you can like break up all those different intermediaries and actually say, oh, you're taking too much money, I'm going to like replace you. In fact, that's called re-intermediation, when you replace them. So there's like amazing efficiency which the blockchain achieves. And and there's actually less of a hierarchy, but more like a network structure where different blockchain things, decentralized apps basically exchange value with each other. So that's more like a network structure. So these are just some examples of how the blockchain kind of creates value in the society, and we'll get to one more example. All right. And actually, I think Ashfari mentioned decentralized identity, and I think that's actually I think is primary, because having just that actually helps to make blockchains more compatible with society, and actually, basically it can be used for more things in society, and including the digital pound, and it can still combine sovereignty and privacy with compliance. But actually the most critical use cases are actually not to do with money. It's actually things like voting and issuing of certificates, like for example, you're a student or so. So there are many other like really important applications of the central ID on the blockchain. And in fact, I think, every citizen business should get one. And that's actually EU. This is like from the news from actually like a week ago. EU official says that basically that all inhabitants should get like a blockchain account in the EU. So that was interesting to read. All right. So okay, now I will just focus on some specific like positive use cases for the digital pound. Some roles it can play. So one way how we can come to be probably is as a private permission blockchain, so not fully decentralized, but basically has like customized privacy and basically has this structure which is envisioned here, which there's like a digital core ledger, and there are these payment interface providers. That's part of the specification. And maybe all participants get a decentralized ID, and actually maybe that contains the ID of the nation states. This is one way how it could happen. And I'm just going to like talk about these metaphors rather than going into technology. So the first metaphor is like that actually we should focus less on the digital currency, but more on that is actually a platform. That's actually the more useful thing. It's like a walled garden, a trusted platform where basically different applications can run. Those PIPs which I mentioned, so that would like enable innovation. That's what the Bank of England wants. And then, for example, programmable money is one such application, and I'm interested in those applications for programmable money for social good. Basically, that's and that is this platform will be neutral. That's basically not, it's not controlled by a private corporation. But the different PIPs, those payment interface providers, they basically connect to it and they provide some services. Right, a lever. Well, so here's like bringing the influence of monetary policy directly into the blockchain. And in the Bank of England mentions those stable coins, which are basically coins on the digital currencies on the blockchain, which are pegged to national currencies. And he says that they are there, but they are not. They don't have like complete. They can't be fully trusted. They say because they can be depegged. So they say, okay, so by offering this digital pound, we offer like this absolute assurance that this you can always redeem it for a pound in a bank. So in a way, then this acts as a lever that basically inside the central application you have this thing which you can absolutely trust is not going to be depegged. However, even stable coins have a similar effect. I mean, they do depeg a little bit, but you can buy depeg insurance. And obviously, decentralized currencies offer another form of stability, which is not to do with a nation state. Anyway, so that's the second role. Okay, before we get to the third role, I was going to mention that there are some motivation with the third role. There are some interesting oligopolies that exist and duopolies and related to payments and holding money. And I've mentioned here some of them. And some of them charge excessive fees, and then some of them like control your smartphone. And for example, did you know that Visa and MasterCard control 99% of card payments in 2021? And it's like an investigation by the payment system regulator. And so there, and a recent invention is PayPal USD stablecoin. Anyway, that's lots of issue. But anyway, some of these, the challenge is that they basically they act as pseudo ledgers, as de facto standards. They're basically like, and they have so a place that basically let's integrate many other things where you can like hold money, move around money. So obviously it's a great opportunity for a digital pound to kind of create more competition here to this. So being like a mediator, like a transfer mechanism, you can like withdraw money to it for free and maybe deposit and send somewhere else, and mediate between different accounts and applications, and also mediate between what's like the regulated financial system and DeFi. So I think it's a great role for the digital pound there, and also like a migration mechanism that you're using a certain like bank app or something. Then actually you can separate the value and the data, and then actually can enable you to like to move it, migrate somewhere else. So also the history, because that's what the blockchain is. It has like it stores the history of things that has happened. And in the blockchain world, this is only common. This decoupling between your data and the front end. For example, in this social media protocol on the blockchain, where you own your data, but you can choose a variety of user interfaces, but it's always your data, and you can use any UI you want. Okay, and the fifth role, I'm not judging if it's good or bad, I'm just mentioning this obvious thing. It's like something for norm and law enforcement. And as we heard here an example, you can use it like to prevent, for example, those under 18 from buying certain things, while still respecting their privacy. Another example is to do more like with, which we mentioned in our seminar, so our technical workshop was actually used from banking, where actually your decentralized ID might actually contain something that says, okay, you are allowed to be a trader, and then actually you're allowed to do a bank transaction on the blockchain, which is fully legally compliant, and without like disclosing your full details. So then you actually, you follow the norm and the rules of that industry. So this is quite common, and that's happens in JP Morgan's Onyx, for example. But sometimes it's about preventing transactions breach UK law even in other territories, and that can also happen. And again, this does not require digital pound because all that happens. So USDC has done this. For example, they were forced by OFAC, and they actually confiscated money from some people that were deemed to breach sanctions. However, there are some stablecoins like Tether where don't do like law enforcement. All right, so now kind of went through like 5 roles that Japan can play. Right, and just to finish, so I mentioned these 2 roles. So basically, in the West, a certain president of a certain country in the West says, "Oh, we can't allow the integration of the normal financial system with the decentralized one." So that would be like this antagonistic. There's like a danger, and like, oh, we want to put CBDC on the left side. I'm not sure that's a good approach. So maybe we should like consider like, is there a synergy between like the normal regular financial system and DeFi? And I think there is a synergy. So yes, so let's go back to our the father of economics, and we're born not far away from here. That actually says that the primary natural moral right is like a freedom. You have different economic systems that you can choose between, and actually, and that nations. So you choose the one which is like efficient, and the nation states remove obstacles and barriers. And the biggest evil is collusion, cartels, and market obstruction. And then he described like competitiveness and market friction. So, for example, during his time, how people are trading in ton markets, but then actually, there is, if you compare that with how trade happens, for example, on the internet, there's even less friction. So he basically realizes his vision even more, and on the blockchain there are even more obstacles removed. So when you are trading, for example, NFTs globally, there's even less market friction. So in a way, it is becoming more like a perfect market as Adam Smith envisioned. So I think that's why this, like, yes, you can have like the digital pound, and you can have it in the nation state, but also why the integration with DeFi is good. So I think that would make Adam Smith happy. So I think, yeah. So in a way, I think the blockchain is like this full realization of markets and of like kind of economics and capitalism as Adam Smith would have envisioned. So final conclusions. The blockchain is great for decentralized value creation. And there's like, yeah, huge and growing like global market where these decentralized apps create value. But then specifically, yes, it should be also used to transform society. So if we integrate into society, we add we get rid of some oligopolies, and monopolies. So if we create some more reduced friction of the economy inside society, that's amazing. And giving, I think, the central idea to humans and businesses, that will also like enable lots of. That's actually, I think, more like a priority. Yes, and the digital pound maybe. It's not a replacement for a full decentralized currency, but yes, if it can be used to increase market effectiveness in a country and remove blocks and barriers and can increase competition and also give the consumers more choice, then I think it's an excellent idea. Right, thank you.